The capital market probe, of course, they're looking at issues that caused the near collapse of that market. And this morning we're joined by Chinua Azubuike, who is a financial lawyer. Thank you for coming on today.
Thank you. Thank you very much.
Well, yes, they're looking at what may have caused the near collapse of the capital markets, and that was in 2008, by the way. So perhaps we could just get some background from your perspective. What kind of issues should we be looking at here?
I think if we start by, reviewing some of the events that caused, this downturn, issues relating to, market abuse, speculative trading, and manipulative practices in the market. Now, these obviously caused a, price bubble due to the fact that asset prices were not reflecting their true book values. And, this was also further, affected by the margin trades that were ongoing. Unfortunately, this was, there were very weak underwriting practices at the time. And, given, with the negative impact that had with downturn, market lost about 70% of its, capital markets lost 70% of its capitalization. And, following that, there have been, efforts made by the regulators, both the CBN and the SEC, to remedy these situations. And we were very much aware of the novel impact that the CBN and AMCON resolution has done to the banking sector. We have seen a reduction of the banks due to the recapitalization and the bridge bank model. What I think, going forward, what we expect to see, is a focus on trying to implement some of these remedial actions that have been taken to the extent that those require legislative action. I expect to see, the efforts of the SEC in terms of looking at market development, the committees that have been set up to implement recommended changes that would impact positively on the market to be carried forward, and also install investor confidence that has been eroded.
Okay, lots of issues are raised everywhere, especially also about investors' confidence. But let's take a look at this one that was raised on the floor of the the Capital Market Probe Committee. Taking a look at it now.
Members of the ad hoc committee of the House of Representatives engaging players in the capital market as the investigation into the near collapse of the capital market continues. The Director General of the Debt Management Office was the first guest to make a presentation. He explained how the federal government intervened during the capital market crisis using the bond market, a market the agency hopes to continue to encourage.
We hope that there are safeguards that have been put in place to ensure there is some kind of stability in the bond market.
Bond market in Nigeria is still at a very rudimentary stage. If we want us to score ourselves, we say we have developed rapidly, but since we are less than 7 years old, more or less, we are still very young. I want to assure you that we are very cautious, and we are laying emphasis on not going into areas that we will not be able to manage.
The committee also heard from bankers and financial advisors who also appeared before it.
Morgan, you said the unhealthy practices of some banks in the country were largely responsible for the problems in the stock market as they manipulated their share prices using depositors' money. What do you think?
It's the kind of information as a regulator he will be able to have access to based on a detailed investigation. As a bank that doesn't have that kind of insight, I wouldn't be able to confirm or make any comments on that.
They also gave their own suggestions on the way forward.
It's important that the regulations are very strict and enforced. We can't just allow share prices to be bid up and taken to unprecedented heights because of the sheer quantum of monies being put into purchasing such shares.
I think it is important that we stop putting pressure on banks and depending on banks as a basis for capital formation. What we should do from the standpoint of the capital market is to focus on mutual funds.
It's however clear that the committee will not be able to complete its work this week, as the committee has been granted 2 extra weeks by the House of Representatives.
All right, well, there you have the report, and let's take a look at some of the issues that were raised. Regulating bodies, manipulating share prices, pressure on banks, and the issues never ending. But pick one of these items, for instance, because you have people who wonder, how come, in spite of the fact that we have all these agencies, and this still happens?
I think looking at what happened in 2009, because there's been a correction of the market, there's been regulatory tightening since 2009. We've seen reforms in the market. And so, I mean, these occurred because there was a failure of regulation. I think it's been acknowledged, widely acknowledged, even by the regulators, that as at, prior to and as at the time the market collapse occurred, it was due to, the regulatory system not being up to date with the practices ongoing in the market. And going forward, we've seen reforms. We've seen positive reforms, particularly in the capital market. We've seen, updates to the rules relating to, for example, in 2011 there was the new Code of Corporate Governance, which focused on risk management for public companies, and there's been amendments to the margin trading rules. I mean, I know that the second CBN did pass recently. Recently, there was a margin trading rules that was recently published. Now, it's not taking effect, but what we see is that there are structures being put in place to monitor and limit, prevent these sort of sharp practices occurring again in the market. So yes, we see some positive progress. I mean, in that regard.
It's interesting, because you've been asked what exactly what you thought caused the collapse of the market when it did in 2008, 2009. Over the top of your head, you've been able to reel out, some of the causes, and you're already saying that it looks like it's already beginning to get better. However, we're already in the middle of a probe now. Do you think that it was necessary in the very first instance, or it was what was common knowledge?
Okay, well, the timing of the probe.
I mean, the entire exercise, the timing, you can look at it from the aspect of the timing, and also you can look at it from the aspect of the necessity of the probe. This is coming when you say the reforms are already taking place in the sector.
I do agree with you. I think, you could argue that it's ill-timed. I think, what the AGFs did say today, that is a fact-finding mission. So I think the idea is, for now, let's talk about what happened. And then what I expect to see from this is implementation of the necessary, particularly legislative reforms that need to be put in place, because we have bills that need to be passed. We have amendments that are proposed amendments proposed to be made to laws which will strengthen market regulation and also increase transparency and corporate governance. So we expect some of these legislations to be passed. So I think an outcome of this really should be just hearing what what caused the collapse, but also forward-looking, and I think more concerted forward-looking to say what necessary immediate steps do we need to take to implement necessary legislative measures that would take the market where it perhaps.
If I'm to come in here now, you're a player in the industry, and you actually consult and you do stuff for people. So why is it that people of your type didn't even actually blow the whistle? For instance, when they saw that this thing was going down the drain. If I were a client, your client, shouldn't you have told me the way they were going about this practice that was unwholesome in the capital market before the whistle was blown open? Because the shareholders are complaining that they were ill-advised by those people who should have told them.
I agree. I think there's been a failure. I think everybody both stakeholders and regulators do take a part of what has taken place in the market. And I think what's very important is recognizing those failures and being able to ensure that that the necessary measures are taken to avoid that. And so we can see that now, as at last year, there's a SEC subcommittee to review the code of conduct for capital market operators, and the idea is to strengthen these principles of practices, and to ensure that capital market operators are held with high standard and integrity going forward. It's actually a binding regulation, and I think there's also some form of investor education that would be ongoing now to ensure that investors are aware. There is an effort being made to educate investors of what they should know about the market. Really, the market is sophisticated to a large extent, and I think, as rightly noted, we're looking more at institutionalizing the market, where intermediation occurs through fund managers, and so you have less. You're able to rely on the expertise of a fund manager rather than directly participating in these markets.
Well, since you say the market is sophisticated, how can this probe affect the market, and in what way?
Let me get this in context. When I mean sophisticated from the standpoint of a retail investor, understanding the mechanics of the market, looking at prices and being able to value companies is meant for professionals. And I think what the probe, the negative, I think part of the concerns about the probe is the impact it has on the foreign investors and how the outlook they have on the market with some of these, some of these discussions that are ongoing. I think for them, there is a keen expectation to see the market move forward. There's a demand to see capital formation and intermediation pick up in the market.
Yeah, but okay, go ahead.
Yeah, one of the key concerns of the legislators is that most markets around the world have come back again after the collapse in 2008. And the Nigerian capital market hasn't picked up as much as it should have. Do you share this view?
Well, not entirely. I think if you look at, in 2010 there was some market improvement. However, it did dip in 2011. I think there was a 16% capital reduction in capitalization of the market. And if you compare this to, some other global markets, if you look at, I think, compared with China lost about 22%. If you look at, I think, also Brazil, and some other economies also did suffer some sort of reduction, not a marginal reduction in the capital. So it's a global situation. We were looking at the weak global economy, which has also impacted on the ability of the market to develop. There are also certain external factors to that have affected the market. I think, though well intended, we see the banking when the bridge bank, the nationalization of the three banks occurred, there was a loss of capital in the market. That has a negative effect on shareholders. However, it saved depositors, which is also very important to acknowledge. Also, you look at there is local investor apathy. There is the issue of the debt overhang that the stockbrokers have experienced, and more importantly, the security challenges. So some of these factors have also impacted. These are external factors that have impacted on the ability of the market to progress as anticipated.
They seem to be very concerned that, the way the crisis was handled then is one of the reasons why, investor confidence has refused to come back. The fact that there was more emphasis on saving depositors' money, and it seems no concern at all for shareholders. It's one of the reasons why there is this general apathy. You mentioned local investor apathy as one of the reasons why. Do you think that with this investigation, it could actually come back to the market?
Well, yes. Well, the investigations is one thing, which is more fact-finding, what happened, what occurred. I think the remedial action that needs to be taken is what is critical. So, yes, we can talk about why this occurred, what needs to be done. I mean, it shouldn't end there. I think what we want to see is what sort of legislations need to be passed, what sort of enforcement action need to be taken, and let these be implemented. So also asking questions about what have you done. I mean, we can see what the SEC has done, over the past 2 years. We also know what the CBN, the regulatory intervention that they call at the CBN now. I think it's now going forward to say how will these policies be implemented effectively. And also, the market is skewed mostly. You have large participation from foreign investors, and their sentiment significantly drives, market performance as well. And I believe for us, we're looking at how, for example, the demutualization exercise needs to be, implemented. If necessary, there's any legislation that is required, that needs to be put in place. Looking at issues of, the market making, initiative that has been currently being initiated by the NSC. These need to be implemented. We look at there have been appointment of inter-dealer brokers. There's been approval of new listing rules to accommodate other classes of assets on the exchange.
I actually wanted us to expatiate more on one other issue you just raised, which, if we look at the probe panel, the session, we haven't even seen anyone talk about it. And you talked about external factors. You say we're actually also responsible for some of the collapse we saw, or the near collapse of the capital market. You talked about security and the others. How does this affect the capital market?
Security situation in the country does affect, the perception. For foreign investors, generally, you want, they look at whether they look at the market and are particularly concerned about stability, and issues relating to, insecurity is a source of major concern. I mean, some people I've spoken with have said, look, our concern is that once it moves beyond the northern barrier, it changes the whole landscape. And I think it's something that needs to be seriously looked into. It is an external factor that may, hopefully not, but may significantly impede on some of these, policies that are being put in place. And I think it's important. And I just want to mention, there's also this initiative of the Investor Protection Fund that I understand that the SEC has been pushing forward now. The idea of this fund is to provide compensation for investors that lose money as a result of liquidation or insolvency of brokers or malpractice.
How does that affect AMCON's role?
Well, this is focused more the capital markets and shareholders. And I understand they are waiting for the approval of the AGF, for the CAC to establish this organization. I think it's actually going to be I think such an initiative now, if from the House probe, if such an initiative is taken forward to say, let us ensure that this is done immediately and set timelines to implement this. Now, an investor protection fund would certainly augur well for domestic investors, knowing that there is some sort of protection that exists in the event of such a crisis does occur again in the future.
But in the meantime, I mean, before the Investor Protection Fund is maybe passed, maybe strengthened by legislation, what can shareholders look forward to from this probe? I mean, shareholders who lost a whole lot of money during the near collapse of the stock market.
Well, I think money's been lost. It's lost, like in every other market, most investors that lost their money really, it's a capital loss, and some of these were as a result of speculative trading. So there is some level of responsibility, I think also liability that some of these shareholders would take as well. If you go into speculative trading and you deploy your capital, borrow and trade on stocks that you haven't done your research on based on speculative advice, and you lose capital, you don't expect the government to bail you out if they're not going to take the profit. If you made the profit on, so it is really,
Do you think your stockholders, stockbrokers who are found culpable, do you think that there should be some form of prosecution, or do you think that people were held responsible for the near collapse of the stock market as at the time? If anybody's found culpable, should they be prosecuted?
Certainly, and I think if you look at, I think currently within the Investment and Securities Tribunal, there are quite a number of cases that are ongoing now. A lot of cases refer to the SEC, where also refer to the Investment and Securities Tribunal, and the process is ongoing. I certainly agree that prosecution should take place in accordance with the law.
Do you think adequate protection was given to investors as a player in the market?
Well, no. Not as one. In hindsight, you would see that certain sort of structures, regulatory structures that may have been put in place to ensure that uninformed investors, unsophisticated investors were not exposed to some of these practices may not have been properly implemented. Though there were regulations, but another issue was really enforcement at the time. Yes, if some of these practices now had been implemented, we may have seen a much more reduced capital loss that would have occurred. And I think the idea of, like I said again, institutionalizing the market, I think there is this there's initiative of ensuring the fund market and the fund managers are being used more by investors to protect them, so that as a retail investor, accessing the market directly exposes you to all sorts of risks, particularly when you don't understand the complexity of the market. Now, if you go to a fund manager, he's a professional investor, and he can advise you or he can intermediate by pulling your funds and investing in different asset classes and diversifying.
What would be the difference between a fund manager and a stockbroker?
Well, a stockbroker is more or less an agent. A stockbroker acts on your instructions. So you go to a stockbroker and say, buy me X shares, and all he does is he buys it and he lodges it in your CSS account. He does act to some extent as an investment advisor, but then, his advice is limited to what you require. So if you're informed by speculative trends, this share price is going to go up, and you decide, I want to take a position on that and borrow and take a margin and do that, well, there's a limit to what your stockbroker can do. And he's only acting as on your instruction, you being the principal, he being the agent. So a fund manager sets up a fund, and within that fund, investors can invest in the fund, and he gives you, and you earn return on the fund. What he does is he uses his expertise to invest and diversify in different asset classes, bonds, equities, different type of asset classes, and gives you, a weighted return on these. So by minimizing the risk of one person going to just buy equities, by diversifying, you have a weighted return and you're protected because he's informed and you're not, as a retail investor.